Hi, everybody. Jen Berbas with the Berbas Group. I decided to do our newsletter from the office today, change it up a little bit. We're going to talk to you a little bit about the March newsletter and about the February data. Some interesting things that we've been seeing. We've been posting it kind of all over the place. We are noticing that inventory is in fact coming up, which is great. That's kind of what we would expect to see this time of year. It's not that big of a deal, not unusual. But we're also noticing the buyers are coming back into the market a little bit earlier than the inventory is really picking up. So last year, I'm sharing my screen here. Last year over in this area, what happened is the buyers came back long before the inventory came in. The inventory came back to the market early April. Here you can see this big run up in inventory. That was all the previous fall's inventory that had been taken off in December and it was being put back on. So we're kind of seeing another interesting pinch like that, although it's not quite as constrained as it was last year. This active property line is not quite as close to the pending properties line, which is where last year you saw that they were really quite close to each other. And then when that happens, buyers feel a little bit of a pinch. We are feeling anecdotally like there is some organic demand. We were involved in several multiple offer situations in the last couple of weeks. So we do feel like the buyers are coming back in. And we're seeing that here with 172 buyers homes have gone under contract in the last week. We collect this data weekly because we don't necessarily want to wait for the Board of Realtors data that comes out every month. So 172 buyers is really pretty great. We haven't seen that kind of buyer activity in this geographical area since March of last year. Okay. This is pending units by month. You can see the 2024 numbers from last year. It really wasn't all that low. It was a little bit stronger than it is right now, as a matter of fact, but then they did drop off later in the year. We thought it was going to be a really strong year last year and it wasn't. So time will tell. So mortgage rates. Mortgage rates are what has been keeping the activity low. We have mortgage rates right now in the high sixes. Even we saw a couple right around 6 and 5 days and 6.5. So that's really good. And what drives mortgage rates? Well, mortgage rates are driven by the 10-year Treasury at the CME. It's traded at the CME. It is not necessarily driven by the Fed. So when the 10-year Treasury traders raise bonds, the interest rates go down. Well, with this chart here is consumer sentiment. Consumer sentiment is actually really, really low. There's been a lot of layoffs. There's some uncertainty in the financial markets. The stock market has been, down, I think like 10% over the last couple of weeks. So with that kind of uncertainty, buyers tend to pull back and they don't tend to be quite as active. However, the other thing that could happen is bonds could go up. Generally, when the stock market goes down, bonds go up, which means rates go down. And since the mortgage rates generally follow TNX is the ticker, if you ever want to look for it, mortgage rates generally follow the 10-year Treasury. So stocks down, bonds up, rates may come down. That happens quite frequently. Happened in 2008 when there was economic concern. And it happened again in March of 2020, right? Whenever there's economic uncertainty and they need to, juice the economy, they do that by lowering rates, but also it's a little bit tail wags the dog. It's because bonds are going up. I think this is really interesting. This is indeed job postings from last year to this year, and it's actually going up a little bit, which is great. Good news from where it was this last fall. I think people were just kind of in a wait and see pattern this last fall. So job postings on Indeed going up now versus what they were last fall. New listings, we are part of that new listing little bar there on the left. We have several listings that we're prepping for market right now, and we will see how that goes and what inventory looks like the rest of the year. Like I said, it is getting busier for us. We are noticing some organic buyer demand. We are seeing a lot more competition for our listings too, getting more offers and more people lurking. So it looks like it's off to a good spring opener with the Austin real estate market. If you guys have any questions, real estate is hyper local, hyper situational. We are talking about these like inventory numbers. We have about 4.7 months of inventory citywide, but we went and did analysis for Hyde Park this last week and it was less than 2 months of inventory. We did analysis for Circle C and it was really, really low. So, inventory numbers just differ so much area by area. It's just really important to pay attention to exactly where you're focusing your investments if you're purchasing or if you have property to sell. It's important to focus on that area. All right. Let us know if you have any questions. We're always happy to help.